You spotted an error on your credit report, filed the dispute, and waited, but nothing changed. And now you're wondering if there's any way to hold someone accountable.
Maybe you lost out on a loan, maybe even a job, or you're just stuck cleaning up a mess you didn't create.
Hi, I'm Tom Christiano, and this is Blankingship. We're credit attorneys here in Virginia, and we've helped clients in this exact situation. People who've suffered real damage because their credit report was flat out wrong.
In this video, we'll show you when these errors cross the line into a legal claim, what kinds of harms qualify for compensation, and what steps you need to take right now to protect your rights and possibly recover financial damages.
Now, let's talk about what counts as a credit report error. Let's say you mailed in a written dispute to correct some significant error on your credit report, and the credit reporting agencies did nothing to help you and told you the disputed account data is reporting accurately. You're not just frustrated, you're downright mad. Who are you going to hold accountable?
Well, you're going to hold the credit reporting agencies, and you're going to also hold the furnisher, whoever's reporting it. These mistakes aren't just annoying; they can cost you money, jobs, even your peace of mind.
So the big question is, are you eligible for damages after credit reporting errors? If you're in Virginia, I'm going to break that down with no legal jargon and just clear examples. Hugo, what actually counts as an error under the law?
Well, in Virginia, there are credit report errors that include accounts that don't belong to you. Maybe that's because of its identity theft, or somebody mixed you up with somebody else, what we call a mixed merge file. You can have errors that where the balances aren't correct. Let's say you paid something off and they're saying that you still owe it, or they're misrepresenting the amount of your balance based on the payments that you've made. You can have accounts that are marked late when you actually paid on time. You can prove that you actually paid the account on time and you shouldn't be reporting as 30 days late. What about some other ones, Tom?
Well, you can have outdated negative information that's still reporting on your credit file when it should have come off. You can have debts reporting that you never had, which is a sign of identity theft, obviously. Or there's debts that should be reported as discharged in bankruptcy, but are being reported as current and open past due debts in violation of the bankruptcy state.
There's a variety of different things, and all of those could lead to a potential legal claim that you can file against the credit reporting agencies and whatever company is furnishing that data to the credit reporting agencies.
If they followed the steps of disputing, Hugo, what should they do next?
Well, if you've done that, then you want to probably call a lawyer. That's probably the first thing that you're going to want to do, and get some quality legal help to help you put together a lawsuit that you can now go after the credit reporting agencies and hold them liable for not fixing it under the Fair Credit Reporting Act.
And if you contact a lawyer, the lawyer will know that under the Federal Fair Credit Reporting Act, you can ask for money damages if you suffered what's called an actual injury. Hugo, what does an actual injury mean?
An actual injury means that your credit has been damaged to a point where you can't obtain a loan, a job, or an apartment. In other words, you had good credit until this error showed up on your credit report. And now, because of it, you're not able to get the things that you should have been able to get if your credit had been reported accurately.
Right. And it can mean you applied for a loan and you were denied credit when you should have received the loan, or you received credit on terms with a higher interest rate because the score was lower than it should have been. Really, actual injury can mean anything along those lines, right, Hugo?
Yeah, it does. And when it comes to jobs, you can have an issue with obtaining a job because somebody pulled your credit report and determined that you probably weren't the right fit. If it's like in the financial industry, you could also have security clearance problems with your job. So let's suppose you work for the government or you work for an entity that requires you to have a security clearance. When you have a top security clearance and now all of a sudden some erroneous information is on your credit report, well, you're going to have to report that. And that's going to be very embarrassing. So there's also emotional distress, right, Tom?
Right. You can have emotional distress, anxiety, embarrassment over the error. I've had instances where people have had to have their credit exposed to their employer because they have to self-notify that their credit had a mistake on it and it's past due credit, or else they could lose a security clearance. And that's very embarrassing for people. And you're entitled to damages for the stress, anxiety, and embarrassment from inaccurate credit reporting.
There's a whole host of actual damages, and more than likely, there are multiple defendants and entities that violated your rights under the Fair Credit Reporting Act.
That's correct. Experian, Equifax, TransUnion, they may have all violated the Fair Credit Reporting Act by failing to conduct a reasonable investigation, and the entity that is reporting that inaccurate information for example, Verizon, they may have violated the Fair Credit Reporting Act as well.
So there's multiple different potential defendants, and all of them have failed to do what they're required to do under the Fair Credit Reporting Act, which is to conduct a reasonable investigation to look into the disputes that you submitted and try to get it right. But they really don't care, do they, Tom?
They don't. And Hugo, let's talk about why these violations are so prevalent and what these entities are doing to cause harm to consumers in Virginia.
Sure. In our years of practice suing Experian, Equifax, TransUnion, what we discovered is that over time, they've become more and more concerned about profits over accuracy. Most of these consumer disputes are outsourced to companies in India, Costa Rica, Chile, and elsewhere that they pay as little as possible to process as many disputes as they possibly can.
Now, each of the credit reporting agencies are processing approximately 30 million consumer disputes each year, and that can add up. Let's suppose they paid as much as $1 per dispute. That would cost them $30 million each in every year to investigate disputes. Now, Hugo, are they spending $30 million a year to investigate disputes?
Now they're spending about $3 million a year. But while $30 million a year sounds like a lot of money, it's only $1 per dispute. I mean, how much of an investigation do you think you're going to get for $1? But the truth is even worse than that. We've discovered that the actual cost is closer to 12 cents per dispute. That's right, 12 cents per dispute. You think that's much of an investigation, Tom?
It's not. So if you want to know why your identity theft dispute or your inaccurate account that says you were late when you can prove that you paid on time is not getting fixed, they're charging 12 cents per dispute to fix it. They're never going to get it fixed.
Nope.
What about the furnishers, Hugo?
The furnishers aren't much better. They've started to outsource their dispute processing as well, and they're sending it to foreign countries, just like the credit reporting agencies. We've discovered that some of them are sending them even to the same processing company as the credit reporting agencies. So think about this. Your dispute goes over to India. It's at the same company, and then they send the dispute up 3 floors to another company that doing their dispute processing with them, and then it comes back down. 50 cents later, the investigation is complete. And guess what? They verified you owe the debt. No changes to be made.
Not every mistake means you get a payout, right, Hugo?
No, that's true. They have to be a real mistake and not just an innocent error. As frustrating as it is, the law punishes companies if they're careless or reckless or fail to conduct a reasonable investigation. You also have to prove that whatever you're disputing is not accurate. So if they can say, hey, well, sorry, it was accurate, you don't have a case.
So let's talk about what this looks like in real life. A dispute violation error can mean that the credit bureau ignored your dispute or sent a boilerplate response without actually checking the facts.
The bank or credit card company kept telling the bureau wrong information even after you provided proof. So you submitted your dispute. The credit reporting agency sent it to the furnisher. Let's say it was Bank of America. And then Bank of America said, well, that's what we're reporting, so it's going to get verified. And round the loop it goes.
Right. Let's say that you won a court judgment and you settled a debt, but the credit bureau failed to update your credit report to show that the debt has changed and you're no longer past due. That could be a type of violation that leads to damages.
Yeah, there's lots of them. We have a lot of identity theft clients, but we also have a really eclectic group of people. And one of them was an auto lease. You remember that auto lease client that we had, Tom?
I do remember.
Yeah, so she had an auto lease that she had paid off early. So she's doing what she's supposed to do. She says, look, I want to buy the car. She goes to a bank. She obtains a loan. And 4 months before the auto loan is about to expire, she sends him a check for $12,000 as the payout. Well, as it turns out, the leasing company said, well, that's not exactly the right amount of money. We want a little bit more because we think that we need to pay the taxes. So there was a dispute going on between the consumer and the auto leasing company. What made this even crazier is that after she had paid the $12,000, the next month they reported that her account was charged off and that she still owed them $12,000.
You would think that would be an easy case to fix, but it was anything but. The leasing company and all the credit reporting agencies failed to conduct any sort of reasonable reinvestigation, and they just took the easy way out. They verified the account as reporting accurately and left this item on our client's credit report, even though she had paid the $12,000 and they were reporting that she had charged off.
That took us a while to fix. That was a particularly difficult one, but ultimately we did. It came off of her credit report, and she was awarded damages from the violators for failing to clean it up.
Let's talk about the limits or deadlines in Virginia for an inaccurate credit reporting lawsuit. And here's where some people get tripped up. Even if you're eligible for damages, you have to act fast. Hugo, what are the deadlines?
Okay, so under Virginia law and the Fair Credit Reporting Act, you generally have 2 years from the date you discovered the violation to bring a lawsuit, and sometimes up to 5 years from the actual violation when it happened. So, what does that mean? That means after you disputed it and they didn't fix it, that's when the clock starts to click. But don't wait, because that 2 years may seem like a long time, but it can go by a lot faster than you think. Isn't that right, Tom?
It is. Let's talk about what damages you can actually get in a credit reporting case and break them down into what we're really talking about when it comes to damages. Now, in Virginia, you can recover money for out-of-pocket losses. This is the extra interest you paid, higher insurance premiums, or denied applications. What other types of damages are there, Higa?
There's a whole host of emotional distress damages that consumers face. The anxiety, stress, and embarrassment that you suffered. Each month when you're disputing and you say, look, this seems rather simple. I paid this lease off. I gave them the money. It should come off, but it doesn't. How frustrating is that?
It's very frustrating, and that's why the Fair Credit Reporting Act allows for recovery of emotional distress damages. You also are entitled to statutory damages. If the company broke the law willfully, you can receive $100 to $1,000 per violation, even without proving an actual dollar loss.
Punitive damages. Now, this is when they have a willful violation that they know they should fix it, or they're not doing part of what they're required to do under the statute. It seems like a lot of these credit reporting agencies, now that they're disputing and sending your disputes out to India and Costa Rica and Chile, they're not conducting a reasonable investigation, and they know it. And punitive damages are available.
In addition, you're entitled to attorney's fees and costs under the statute if you win, and this is additional damages that can be awarded by the court.
And those attorney's fees can even be higher than the amount of damages, because these cases get very expensive.
So your damages are not just limited to your out-of-pocket monetary damages. You have to go through the dispute process, and discovering that none of the parties is going to actually help correct an obvious problem is extremely stressful. And many of our clients report anxiety, loss of sleep, loss of appetite, and even loss of hair. So in addition, there is embarrassment and humiliation for being denied credit or credit on the terms you should have received if the problems had been fixed. There are a whole host of non-monetary damages that judges and juries will award.
We had one client who was the victim of identity theft, and she went in to buy a car. And when she went in there, she was denied credit. And the finance manager was telling her that in front of somebody, and she was a school teacher. And one of the people that happened to be in the car dealership at the time was one of her former students. You want to talk about embarrassment? That was really embarrassing, wasn't it?
It was embarrassing. Okay, let's get to how to prove your case. Hugo, let's be real. Trying to get damages requires proof. What types of proof should people be keeping?
Well, I always tell clients to keep copies of all their records, their credit reports, their disputes, rejection letters, and emails. All these documents that you have, it's very important, and ultimately they are going to help prove your case.
Well, if you're talking to someone on the phone to resolve your credit report problem, it's a good idea to take some notes of the phone calls, who you spoke to, the time and the date, and what they promised to do relating to the problem you have with the account or with your credit report. Many times these notes can supplement what the bank will write in their notes, because keep in mind, some banks are recording the telephone call or they're going to write notes, but they're going to write their notes in a self-serving manner that isn't necessarily what actually happened during the call.
Yeah, so your personal notes that you're writing down, you're going to forget this a year or two later. But if you write it down or you keep a journal or something like that, then that's going to help you, and that'll jog your memory, and that'll be very important.
Right. And you want to save any bills or statements that show extra charges or the timing of why you applied for credit or why the application was denied. The more records you keep, the stronger the case you can have. And it helps us down the line. If you can give us this information, we can help articulate and explain to both the credit reporting agencies and ultimately a jury why you're entitled to the damages that you seek.
Now, the more detailed your records, the better it's going to be, because ultimately you're going to have to put on evidence in front of a judge and a jury.
Well, if you have a journal, then you are recording contemporaneously what happened, and it helps, as you mentioned before, if people are forgetting what happened in their lives. I think a lot of times we all have daily stresses in our lives, and people forget that when you have a credit report inaccuracy, it's a cumulative effect I've heard it described as getting punched in the arm. Whereas if you get punched in the arm one time, maybe it hurts. But when you have a credit report problem, you've already been punched in the arm and then you constantly get punched in that same spot. Then it just makes it more aggravating because you send a dispute letter, they don't fix it. You try to get a credit, you can't get it. You have to go to your job and your employer says, "Oh, why are you not paying your credit card?" And you're saying, "Well, it's identity theft." So it's that constant stress, constant getting hit. And it really leads to problems that can support your emotional distress damages.
There's also other examples that with people who have journals and actually write stuff down. So, say, for example, you're supposed to go to a party and you're like, I'm just really upset. I didn't get a lot of sleep last night. And you say, yeah, I'm not going to go to the party. That's something that you want to write down because ultimately a jury's going to listen to that and they're going to go, wow, it really did mess up your life. And it does. It caused a lot of stress for a lot of people.
And when that stress builds up, you go, when should someone start talking to a lawyer, pick up the phone?
Once you disputed at least once, and it's not coming off, then you probably are not going to get it off, and it's a good time to talk to a lawyer. The good thing about most lawyers, and particularly us, is that we're not going to charge you any money up front. We're not going to bill you thousands of dollars to step in and represent you. We're going to help you out and take these cases on what's called a contingency fee or percentage fee basis, which means you're not going to be out of pocket any money. And we're going to get paid by the money that we collect from the people who violated your rights and caused all these damages.
That's a good point, Hugo. So if you're in Virginia and you're not getting anywhere with the credit bureaus or you've lost money or sleep over a credit error, don't wait. An experienced Virginia credit law attorney can step in, figure out if you're eligible for damages, and help make the companies actually pay attention.
These cases aren't just about you either. They're about everybody because when you hold the credit reporting agencies and the furnishers liable, you're going to help the next person down the road because maybe they're going to actually do something and try to fix their procedures and start paying a little bit more and doing a little better job.
Right. So let's review. If you found a credit report error and you suffered real harm, financial loss, job denial, emotional distress, you disputed the error with the credit bureaus first. The credit bureau or your creditor acted carelessly or willfully ignored your dispute. You move quickly before the deadlines run out, then yes, you could be eligible for damages right here in Virginia.
But not all credit errors are created equal, and every case is a little different. So get advice early from a lawyer, document everything, take notes, and prepare a case that ultimately might go to a jury.
And listen, if you have any connection to Capital One, and millions of Virginians do, you can't afford to miss our next video, Capital One credit report problems you need to know about.
These issues are coming up more and more for Virginia consumers. Knowing your rights could save you a fortune or your credit score.
Click now to get ahead of potential trouble, and we'll see you over there.
We'll see you next time. Thanks for being there.